Let's turn to the economic outlook, and a lot of gloomy predictions coming in both locally and globally. Today markets were severely rattled. There's talk of a possible recession even in the United States, an economy that seemed to be picking up. Well, coming back home, the South African consumer is likely to be less of an influencing driver of economic growth. That's the view of Standard Bank's chief economist, Goolam Ballim. He says a combination of anticipated higher inflation, interest rates and lower income amongst households will put a brake on the discretionary spending of South Africans. Standard Bank says it expects the economy to grow by only 0.8% this year, roughly in line with what the World Bank is saying.
The economic outlook continues to be grim, making it difficult to deal with long-standing societal plagues, namely unemployment, inequality and poverty. Standard Bank says it expects that the oil price could rise as non-OPEC countries reduce their oil production on the back of currently lower oil prices, which makes it unprofitable to produce. But he suggests that as the supply-demand dynamics become more balanced, the global oil price could rise to between $50 to $55 a barrel later this year.
As it stands, inflation is likely to accelerate quite precipitously during the course of 2016, mostly on the back of rising food and the rand's weakness. But that said, the wild card, of course, is oil prices because of potential geopolitical threats in the Middle East. Our sense is that if oil prices were to rise during especially the latter half of 2016, it may very well be countered somewhat by an appreciation in the ZAR, helping to buffer any material rise in petrol prices and so not injecting additional risks to inflation.
Ballim says South Africa is at a turning point where it has no choice but to make correct policy decisions. He says government's recent intense courtship of business in a bid to find solutions to the economic crisis is encouraging. And he adds that the much-anticipated budget speech later this month will need to emphasise government's push to balance its books and reduce its debt profile.
For the sake of government and National Treasury's credibility, Minister Gordhan is going to have to show that government is going to be so much more efficient, so much more dutiful and so much more diligent with respect to expenditure management. It would be wrong to simply place the burden of balancing the government's books by raising additional revenues, by heightening the tax burden. It is going to have to be a delicate balance to raise, say, an additional 30 billion rand over and above what has already been budgeted, by managing that balance between lowering or more effective expenditure and being selective about additional taxes so that it raises the revenue that he requires but is not menacing in terms of further detracting from growth.
Ballim is optimistic that China may see its growth stabilise at around 6.5% to 7% over the medium term. This as that country's government embarks on measures to stimulate the economy, suggesting that this could help in lifting commodity prices, albeit slightly. But he also emphasised the need for African countries to diversify away from their current reliance on the exportation of natural resources. Nompumela Losiziba, SABC News, Johannesburg.